Tuesday, February 15th, market analysis, Stan Ehrlich. Good morning. 9:57 California time, almost 10 o'clock, about the middle of the trading day. So you got 3 hours and a couple of minutes until the close. And what a boring day so far. We have had a total of about a 3-point range. We opened a little lower, went down very slightly here on the left-hand chart, minute by minute. Rallied to a slight new high around 12.75. The low was in the ballpark of 409.5 to 409.75. And where are we? 411.5. Pretty much the middle of the range of the day so far. Pretty obviously the market is waiting for something. Now, having said that comment, look at what we've got here on the daily chart on the right. We have actually 10, 11 or so days of a trading range taking the form of approximately a downward slanting channel. Yesterday, the market managed to close right smack dab on the top of the channel. You could argue a hair above or below, it really doesn't matter. It's not significant enough to be important unless today, and right now we're on the line again, today, we managed to close significantly above the line, which would be even unchanged, which would be about the same close as the previous day before yesterday, Monday. Market's waiting for something, obviously. We kind of know what it is. Government announcements, numbers, usual stuff. So, getting above yesterday's high is going to be a new high for half the time period we've been going sideways, and pretty close to making new high closes and pretty close to making higher highs for the whole darn trend up. And that's exactly what I favor. That's exactly what I think is going to happen. And I think it's going to happen very soon, maybe today, maybe by the end of the week. I do not want it to close below yesterday's low, which is almost below the previous day, which it probably will in the same day. And that'll be a new low close completely for this big sideways trading range. Oh, I'm sorry, second lowest close, but could be, if it sinks a little bit more, the lowest. And hey, that could produce a move down to 400 or 399, which isn't all that bad because that is the neckline. Remember, this is a large head and shoulder bottom so far that's been acting great. We have a shoulder in June. We have the October 13th, October lows, which I talked about 1 or 2 months in advance. Pinpointed it the day it happened. It's the bottom of the bear market of 2022 and the beginning of the bull market of 2023 in all in one day, October 13th of 2022. An ER bullish combination automated buy signal. Now, we broke out of the neckline on the upside, and we are maintaining those levels, which is very important. We've crossed the 200-day Dow theorist long-term investor type moving average and stayed above that line for weeks now. We broke the major long-term bear trend line running across the highs of early January, the beginning of the bear market of 2022, all the way until a few weeks ago when they were finally busted, and it stayed above that line. Those are 3 particularly important levels, and they are around or under 400. So I fully expect 399 to 400 to hold if we are going to go down there in the first place. I don't think so. I think we're going to start heading north very soon. Okay, enough said about the S&P 500, except that this head and shoulder bottom formation shows us that we are supposed to go up to a minimum upside objective equal to historic highs. The highs were made in January of 2022. And that's probably not going to stop it either. We're probably going to see new historic highs during this year. I think we have started the bull market of 2023, which could easily, bleed into 24 or whatever. We'll see how it evolves. Now, the DIA has a little bit more interesting situation. We have, attempted to and did make a slightly higher high going back a couple of months to December 14th. But it was so nominal that it is a resistance area. The third time we were basically up to 343 and a third. And it dropped back down, closing lower yesterday, and we're sinking a little bit today. It looks like a pennant formation. I've got the blue bear trend line across the last 2 months. I've got a little thin blue trend line across most of the bottoms, except for one exception, which ends up being a bullish engulfing. During the same 2 months approximately, we're getting squeezed out the end of it very soon. It's got to move out up or down soon. I vote for up, of course. It tried, but it failed yesterday. But all right, we're just waiting a little. This pennant is the last shoulder on the head and shoulder bottom. Same timing. We've got June lows for shoulder, which of course at the time was the head and shoulder bottom by itself. Not that rare, but not that common either for a big head and shoulders to have embedded other formations in it. Remember, this is from May, June, really, all the way through December, January, if you want, of this year. So that's a half a year or a hair more of time frame, 6 months, 7 months. Now, the bottom is a double bottom. Great. And I really can't justify making the last shoulder here a head and shoulder. All it did was come down a little earlier than I expected, a little higher than I expected, but still, that qualifies for a shoulder low. And because it's so stunted and happened earlier, I think that's even making it more bullish for the major formation in general. Looking for higher levels. Boy, if this stuff goes down, I'm not going to look real good. The Qs. We have some interesting development. Today, we may have made a tiny, let me go back to the 1 minute real quick. Yeah, no. Nope. Okay, so, well, actually, just a second here. Yeah, it looks like a tick or two. No big deal. Today's high is a tick or two above yesterday's high, but the same. And it stopped and it pulled back, but not much. We're almost dead unchanged here on the QQQs. It's only down 1 tick at the moment. Could easily turn green right there in the upper right-hand corner. It's red to the moment, meaning down. We're not down but $1.50 in the DIA and $1.18 at the moment on the S&P. So I'm pointing out the net changes here are not much. Easily a half hour, 5-10 minutes could pop up and be higher on the day. I do want to bring into and that is stopping the rally so far in the QQQs, which have been trading in the upper half of yesterday's range, trying to break convincingly a minor bear trend line across the tops for the last 2 weeks, I guess. And as it continues to work higher, I expect we're going to be banging through resistance levels, previous highs of which there are about 5 or 6 to overcome. 5 looks like. And perpetuate the long-term trend. Within the next week or so, I do expect to see new highs for all of these indexes for a long period of time. Period. What about the 2000, Russell 2000? I do not mention it very often. It broke out of a huge resistance area around 188 to 190 a few weeks ago, very convincingly, and got overbought. Normal. Came back right into the support area, which I had as red before when it was resistance, and now it's green because of the buy area, and it bounced right out of it. And we are about to have a new high close and maybe a new high as well since it tested that support area. It's working great. If it makes a new high, it'll be making a new high since August. And that is very, very close to the highest high in early August since, what is that? April 21, 22. So the long-term trend is obviously, as far as anybody left that might be bearish and question, proving itself to be a long-term trend that's bullish. Higher highs over a significant amount of time, lots of indicators that were bearish are not maintaining those indications. A lot of bullish indicators are turning bullish convincingly, la, la, la. Futures, okay. Now I'm going to start out with OJ and go through those futures contracts markets, which I have something to say that hopefully is significant, or a brand new signal, or a signal that's in progress that I want to comment about. Here, orange juice, I screamed bloody murder at the end of last week that it was extremely overbought. I have not seen a daily data chart that had a 97 or 8 RSI. And this chart at the bottom, the subgraph, is my custom relative strength index. I did learn RSI from Wells Wilder himself, probably in the 80s. And it's displayed differently and calculated differently, but it's basically RSI. Now, it got incredibly overbought, and look at the net result. I hate chasing a market that turns oversold or overbought. Never sell a market that's been going down a lot. You must have some awfully good reason, otherwise you're going to sell the bottom of a break, and vice versa for the tops. So not surprised the market has come down. Now, I think it might come down just a little bit more. The only support that starts at 225 is not that big a deal, and we're at 230, so that's not very far away at all. I think maybe the better level for it to turn back up again might be 212, but anytime, we're nowhere near overbought or oversold one way or the other at the moment, so there's elbow room for a bit of squeakiness both ways. This is getting oversold now in bonds, so I think it's going to turn back up again soon. The higher this goes, the lower rates go. So the trend really hasn't changed yet. If you look at multiple months, you've got higher, lower lows and lower highs, except for the last couple of months. Things are beginning to change. I have said for many weeks now, months, that I think it's building a bottom. I expect to see some sort of a major long-term bottom develop. It may take several more weeks or even a couple more months plus, but I'll do my best to interpret what's going on here. Right now, it's a little oversold, not that much, and I'm kind of looking for a minor buy signal for a little bit of a rally. If that new rally carries above 132, it's going to continue to perpetuate the long-term trend change. I have to say the same thing about the, did I skip 10-year notes someplace? That was the bonds. I thought I had. Okay, I don't. I'll be coming across the 10-year notes in a moment. Sorry about that. Let's go back to platinum. Now, third day, fourth day in a row oversold. It is significantly oversold, not horrendously. Look what happened the last time we got really low, which we're very close to. It was a profound major turning point. Unfortunately, I didn't get a buy signal on the lowest low, but a couple of days later, 3 days later, I got an ER buy signal. And for platinum, we've had some very, very good signals. That was a great new short sale signal. That was another one that was really good. That was another one that was extremely adequate. That was another one that was on top of the market for months before and after. Bad buy signal, lost well, not necessarily. That could have offered a small profit potential. Depends on how you handle it. I'll just say it was a small loss. Big deal. And that profitable buy signal right there. Okay. Next. Platinum has been covered. This is gold. Hey. The buy signal that occurred on September 28th was the first low of a triple bottom that evolved. Damn good start. A sell signal that did not work. A sell signal that was a little premature, but you had some profit potential in that for a small amount of profit for a day or two. Nothing much, but probably a very small profit. Everything I say I can back up, by the way. The bearish engulfing that happened on February 2nd, congrats, great move down, looking good. We had another one that worked for a few days. Now, yesterday, we had a bullish engulfing, and that theoretically reverses everything, and now I was going to go long, which I would have, could have, should have done this morning, and I got stopped out as well. So this is a day trade loss, and it's now lower than yesterday's low. It looks like it's going to stay there. It's perpetuating the overall bear trend, so I'm still bearish now. I have to flip again and be bearish. Too bad I reversed for one day, but I had good reason. How much more lower? Well, we're actually getting close to where I thought it was going to come down to in the first place. 118. We are oversold. Okay. This implies to me that we're going to turn back up again, and this buy signal was premature. Maybe I'll get another one. We're oversold. All I got to do is have a bullish engulfing at this point. Next chart, crude oil. Couple of important, profound things to say about crude oil and heating oil, I believe. We did get the second high on a broad double top with an ER sell signal, the automated trading system ER signals. Great. That's what the system is built for. Explanation point. We had a modest profitable sell signal here, and we had a real good one so far here. If we start making lows below, let's say 70, this is a long-term perpetuation of a long-term bear market, and we could drop down another 10 or maybe $20 in a probable month or two, from obviously 78 into the 50s. But we need to get below 70 first. I think it's quite possible. This market's been going sideways a little bit. The trend is still down. You've got a little bit of loss of downside momentum on a longer term basis, but I think it's going to regain itself downwards soon. Next chart is heating oil. Basically the same kind of commentary here. We got the top of that damn bull market to the damn day, and darn it, we got the high at September 9th before a very, very big sharp break. We also got 2 days off the top here, and we got the high day only a few weeks ago. We are close to making a new low close. We're not very far away from making a new low. I do think this is, well, the middle of the week, of course, Wednesday, going to be a new low, maybe by the end of the week. So more downside momentum, and by Friday's close, we could be below 2.65, I think, possible. That's going to get more stops below the low that was made in early December. And on a longer term basis, that's going to perpetuate the bear trend. And this support that we have from back in August and September, I think it's going to go bye-bye. And this is going to be new lows since April, and a long-term bear market may likely have started, which will probably drive prices down into the 1.10 zone within a few months. Now, next chart. Wheat, not too much to say here. I'm just so happy we sold the top of the market after the start of the war about a year ago, March 8th. Next. Yeah. Some great signals here as well. And I'm going to leave you with this. Profitable trading to you. Thanks for watching. Stan Ehrlich. Mañana.